At the open, our all-time high for the S&P 500.
It's your boy Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Becky quick. While the average man looking at this sad life. She fine as yeah. I'm over here looking at tails and whips like 5-6. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-Wops crossing. Rich with hot V's and pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounce. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETFs, making profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. and I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them cans, make profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing, dog? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang, making profits. We some snipers.
Hey, yo. I'm tired. Sorry. What's up, folks? Welcome to the True Trading Group live stream. The final one of the year. Hope you all had a wonderful year and are looking forward to an even better year to come in 2025. Hope everybody stays safe, has fun tonight. We're doing things a little differently today. A little bit of a midday live stream for you all instead of the after hours live, because I'm sure a lot of people probably won't be around at the end of the day. Everyone's getting ready for whatever plans or festivities they've got going for the new year. So we're going to get into here today, guys. We're going to recap kind of what we got cooking here on the day. And we're going to talk about recapping 2024, the disappointing lack of a Santa Claus rally. What does that mean for next year? What are my thoughts and some insights going into next year and some ideas that I have that we'll share with you guys. So welcome to the True Trading Group Live. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you guys didn't know, we received the Benzinga FinTech Chairman's Award for Best AI Analysis Tool this year. So 2024 was a big year for our company and for our platform, as we did receive that award from Benzinga, which is really nice to see that industry insiders or industry leaders rather are recognizing us for what we are doing with AI technology and improving the success rates of retail traders all over the world. There's the award right there for the Benzinga FinTech Chairman's Award, Best AI Analysis Tool. And my business partner and I right there on stage receiving that award in New York City just last month. So it was a good year. You know, it was a big year for our company. We also signed a data partnership agreement with the NASDAQ. So we are working hand in hand very closely with the NASDAQ. They actually invited us down to the NASDAQ for the closing bell, and they put our company name and logo up on their screen in the middle of Times Square to congratulate us. And there is my business partner and I at the closing bell of the NASDAQ. So it was a big year for us. You know, it was a big year for our company, and eclipsing 10,000 members from 115 different countries as we continue to build out what we look at as kind of the retail equivalent to a Bloomberg terminal, to give retail traders access to tools and resources and data feeds that professionals have access to, that very plain and simple give you an edge and improve your chances of success. The days of just, opening up a Robinhood account and, farting around on Reddit is not going to cut it, right? It's just not going to cut it. There's enough technology out there now, and there's enough tools and resources out there that we can give you access to that can drastically improve your chances of success. The reality is that the retail trader was not on a level playing field when you look at professionals because of the things that they have access to that retail does not. And we are changing that. We're breaking down those barriers. And it's nice to see companies like Benzinga and the NASDAQ recognizing that for the work that we are doing. But this isn't just about winning awards, right? True Trading Group is also the fastest growing and highest rated premium online educational platform. We combine university level trading and investing courses for those of you that want to learn about this stuff. We pair that with premium stock market tools. We do live workshops, individual mentorship and coaching. And we also send out real-time trade alerts as our professional traders enter and exit positions for stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing. There's literally something for everybody here inside of True Trading Group. Now, you might be wondering why you should listen to anything it is that I discuss on this channel. It's because I didn't figure this stuff out on my own. I was trained by professionals on Wall Street. My first job out of college, working at T3 Alpha Fund in New York City. While there, they had me go through a training program before they let me touch $1 of the fund's money. Then 2008 happened, which was the Great Recession, the huge stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. Now, fast forward, I'm the co-founder and head trader of True Trading Group, along with my team of 8 other professional full-time trading moderators and an over 30-person staff. We've helped thousands of members from all over the world reach their goals. Like I said, over 10,000 members from 115 different countries. 82% of our members have a full-time job. That means they work over 40 hours a week. So if they can do this, so can you. One of the main reasons why they're able to do that is because of the technology on our platform. You also get access to our mobile app. When you join, that lets you see the screen shares. The moderators and I share our screens with you during the day, so you see exactly what we see. We talk to you live on the microphone from pre-market all the way through to the close. We're not gone after an hour or so, and you'll have to fend for yourself. You guys get to receive real-time push notifications directly to your cell phone whenever our traders enter and exit a position. That's how all those members that have full-time jobs are able to benefit from what it is that we do here inside of True Trading Group. So if you guys are new to the channel, make sure you subscribe, smash the like button, turn on your notifications, make sure you never miss out on any of these lives in the future, because I'm always dropping golden nuggets and free lessons, education, trade ideas, positions I'm in, positions I'm getting into. I answer questions. So you guys want to go ahead and just subscribe to the channel, turn on those notifications so that you guys never miss out on any of these. All right. It's been a great year and it's been a great month, and you know, and it's been a great day. We had a great day today. Made some really good money on Holo. Took more profits off on our Boeing trade from yesterday. You know, you couldn't ask for a better way to kind of finish out 2024. I think people are going into 2024, and a lot of people are upset that there wasn't a Santa Claus rally. It really was Jerome Powell kind of put the kibosh on that. You know, on the Fed day, the Fed meeting that we had on December 18th. Kind of feels like it was longer ago than that, but it was only 2 weeks ago. Only 2 weeks ago, we got Jerome Powell come out and said that they're not going to be cutting rates as much as people initially anticipated next year, but then also into 2026. And they also raised their expectations for inflation. So they think inflation is going to tick back up next year. And therefore, they're only going to cut rates twice, not 4 times, only twice. They cut their expectations of rates in half, and they bumped up their inflation expectation. And now you're sitting here and saying, okay, well, now we didn't get a Santa Claus rally. What does that mean then for next year? And historically, when there is not a Santa Claus rally, historically, the data will tell you and the statistics will tell you that doesn't necessarily bode very well for the month of January. But what is more important, what's more important is what happens in the month of January itself. Because when you have a red month of January, more than half of the time you end up with a red year in general. And a lot of people are trying to point to what you have. A lot of people are trying to point to like different situations in history where you've had the market go up a lot over the course of 2 or 3 years. And the last time that you had the markets go up more than 20% in 2 consecutive years was in the late 90s. And that was during the dot-com bubble. And the markets went higher for a third year, considerably higher into 99. After 97 and 98 gave you greater than 20% returns. You got another big return in 99, and then the markets topped out in 2000. The dot-com bubble burst. 01, 02, we had the huge stock market crash and then a recession. But when you look back to the late 40s and early 50s, you had 3 consecutive years of over 15% gains. You had like a 32% gain, a 20% gain, an 18% gain in 3 consecutive years. And on that 4th year, the markets were down 1%. They just talked about it actually on CNBC. It was like, I couldn't believe it. I'm like sitting here, I'm like, oh, I was going to mention this on the live stream. And they literally just talked about it on CNBC maybe 15 minutes before we started this live stream. And then the markets went on to go up again another like 15% the next year after that. And that leads me into what I think we're going to see happen in the markets in 2025. I think 2025 is going to be a roller coaster of a ride with at the end of the year, it's going to feel like nothing happened. But throughout the course of the year, I think there's going to be moments of some severe volatility. I think we're going to see a 10% correction at some point in the index next year. I think you're going to see the S&P down 10%, maybe even a little bit more. But I think that that is a viable opportunity as I think the markets recover going into 2026. And I think you might find at some point during the year, the market's down 10%. And then by the end of the year, the markets are up 1%, or maybe they're down 2 or 3%. And it turns out to be a very uneventful year with a lot of things happening during those 12 months. I think that people need to get themselves ready and to really start taking seriously those that have missed. I know there's many, those that have missed these last 2 years of this market rally in 23 and 24, which is greater than 25% returns and back-to-back years, which is just absolutely incredible and amazing. A lot of people miss out on that because they fell victim to the doomsdayers in 2022 that told you that the world was going to end. There was going to be a depression, all these, people on social media that just try to, incite fear into people to get them to pay for whatever it is that they're pushing. And they just give you such incredibly poor information, such incredibly poor advice. The thing that I would remind you all is to be very careful and be very conscious of where you get your information from and who you rely on for the information that you consume, because you have to realize that 95% of the places that, and I just made that number up, but a majority of the places that you're going to read information from, the way that they make money is by capturing your attention. So all these different media companies and people will literally say the craziest stuff to scare the ever living crap out of you, because fear gets you to click on their articles, gets you to watch their videos, and views and clicks and traffic and audience is how they make money, through advertising. So the more people that read their stuff, the more people that visit their sites, that visit their YouTube channel, that's how those people make money. We do not have ads on our YouTube video. Okay. I don't sit here. You guys don't have to, in the middle of watching a YouTube live stream here on YouTube, on True Trading Group, you don't have to watch an ad in the beginning of it, or there's not an ad in the middle of one of the videos that we post, because we do not make money off of views. I don't need to come on here and give you a bunch of clickbait to get you guys to subscribe because I'm telling you that the market's going to go down 80% and the world is going to end. But a lot of people will do that, and they play off of your fear, and they're not giving you actionable information. They're just giving you clickbait to capture your attention so that that's how they make money. You see, at True Trading Group, we've always done this. At True Trading Group, we base the success of our entire company on the success of our members. If our members make money, then we think the True Trading Group is going to be successful, and it has been very successful for the last several years since we went live to the public in 2017 with 20 people in our chat room. Now, at any given point, there's well over 2,000 people inside of our chat room, and there's 5,000 or 6,000 people that come in and out of our chat room on a daily basis, and we have 10,000 members overall. And that's how we have grown from 20 people to now over 10,000. It's because our members are successful, and our members, when they join, they have success. They tell friends, family, coworkers, and then they join. And then they have success. They tell friends, family, coworkers, and then they join. You don't see ads for True Trading Group all over social media, do you? You probably see ads for a lot of other places, but you don't see ads for True Trading Group because we don't spend hundreds of thousands or millions of dollars on marketing like a lot of our competitors do. We let our members' results speak for themselves. And that's why we're getting the recognition from companies like Benzinga, from companies like the NASDAQ, as we head into 2025 with new tools, new technology, new resources for our members that I think is going to allow us to have the best year that we've ever had. I'm telling you guys all this right now. I am anticipating a personal best banner year in 2025 for myself personally. I think that I plan on making the most amount that I've ever made in my entire life trading next year. And the reason for that is because of all the new technology that we've implemented onto our platform. You're talking about level 3 data feeds, which is an institutional feed that's regulated by FINRA that hedge funds and Bloomberg terminals and professionals only have access to. We have access to that going into next year. Our AI tool received the Benzinga Chairman's Award for Best AI Analysis for breaking down, giving analysis, analyzing charts, giving trading plans, entering exit points to help traders make better decisions. We won an award for that. You couple those two things together on top of the ability that we already have, right? On top of the ability that we already have, the success that we've already had. I've been doing this for 18 years. And now with all of the skill and the knowledge and the experience that I've gained over 18 years and what I've been able to accomplish in my trading career up until this point was without all of those things. Now going into 2025, I am juicing up my arsenal that I know already works. I know is already successful. Members will tell you that what we already do is successful. What we already do makes them money. And now we're getting even more. And these are things that we're getting that other retail traders don't have access to. It's not like I'm saying, oh, we got this new indicator and it's VWAP. And it's like every trader has access to VWAP on any chart pattern, on any charting software that you guys use. In EMA, a Fibonacci level, a MACD, an RSI, a Bollinger Band, an Elliott Wave, whatever the hell you use. Everybody has access to that stuff. That's not an advantage. That's not giving you an edge. Not everybody has access to the things that we now have on our platform going into 2025, thanks to our partnership with the NASDAQ and thanks to the recognition that we're getting from Benzinga. That's why I think next year is going to be the best year that I personally have ever had. And if that's true, then that means our members also should have a lot of the best years that they have ever had. And they've already had some pretty damn good years. But that's what I'm excited for. And I think 2025 is going to be full of volatility. I just told you, I think the market's going to go down like 10% next year at some point. And everybody that sat on the sideline and missed 23 and 24, you have to realize you are on the precipice of the next technological evolution. AI technology is going to drastically change the world. It's going to impact every single sector, every aspect of your life. The last time we had something that severe was the birth of the internet. And now the internet is factored into every single aspect of your life. Think back 24 years ago, 30 years ago, 25, 26, 27 years ago, when the internet was first popping up, and everyone's talking about email and what the hell is email and all. Now, everything you do involves the internet and that type of technology. Well, you have a smartphone? Great. Every aspect of your life is on your smartphone. Every aspect of your life involves the internet. It changed the world. AI is going to work its way over the next several years. It's going to work its way into every facet of your life. It's going to make companies more efficient. It's going to increase productivity. It's going to increase profit margins. It's going to remove waste. It's going to remove, bad decisions and incorrect decisions. It's going to allow for a much shorter time frame for R&D and for experiments and for processes to be streamlined. It's going to make companies more efficient and more profitable, which adds to their earning power going forward. And that's going to increase multiples. That's going to increase earnings expectations. That increases value, and that increases market cap, and that increases share prices, and that increases your account balance. If you missed out on the rally that you've seen over the last 2 years, you need to start getting yourself prepared for what I think is going to be a really good buying opportunity next year. I really do believe that. Now, I tell you about anticipating a pullback next year, not because I'm trying to scare you. I'm not saying the market's going to crash. I just think you're going to have a correction, which is not that crazy. Corrections happen literally on average every 1 to 2 years. We get a correction. We had a correction this year. August 5th, the market was down 10% on August 5th. What did we do on August 5th in True Trading Group? Members, what did we do inside of True Trading Group on August 5th? I'm not even going to say members. You comment. What did we do on August 5th inside of True Trading Group? That day right there. What did we do inside of True Trading Group on August 5th? What did we do? What did we do on August 5th when everybody else was running around with their hair on fire because the Japanese carry trade? No, 90% of the people that were talking about the Japanese carry trade don't even know what that means. They don't even know what that even is. And they're trying to say this is the reason the market's going to crash. It's crazy to me. Yes, that's right. We bought on August 5th during the correction. And I think we're going to get another correction into 2025. And I think that is going to give us a buyable opportunity. I do think that in 2025, we are going to see the S&P trade back down into this area. I'm targeting like a 520 area to kind of just start to eye that up, guys. I do think we're going to get back down to this area that you see down here at some point in 2025. And when that moment comes, I am going to be a buyer. I'm going to be adding in my long-term portfolio to all the same technology stocks that I love so dear and that I think are going to be the juggernauts that are going to lead us through this technological evolution over the next decade, just like the internet did. Now you might say, but Mike, before that happened, we had the internet bubble and the bubble burst. Do you think there's going to be a bubble burst in AI? I do think that there's going to be a scale back in AI where the hype and the excitement and the speculation, everything kind of froth comes off of it a little bit, but I don't think it's going to be a bubble. The reason why the internet bubble was in fact a bubble was because 98% of the companies that IPO'd during the dot-com bubble were not profitable. They were tiny little garbage companies. The NASDAQ was not the mature exchange that it is today. The NASDAQ today has the largest companies in the world listed on it. The NASDAQ back then was the riskiest of risky names that you can possibly own. You know, back then it was the Chevrons and the McDonald's of the world that were the best companies in the stock market. It wasn't the Apples and the Amazons and the Alphabets of the world and the Nvidias of the world. Those were not the companies that were on the NASDAQ. Those weren't the caliber of companies that were on the NASDAQ. Yes, you have Apple and these companies, but they weren't what they are today. And 98% of the companies that were on the NASDAQ went bankrupt and went to zero. And that's why the NASDAQ went down 75% during the dot-com bubble, because all of those companies were pieces of garbage. And just because they just put a .com in their company name and they went public and the stock went up 1,000% and the company never generated $1 in sales or profit. That's how the .com bubble then popped and came to an end. I don't see that happening this time around, because this time around, the companies that are operating in the AI space are the largest, most successful, most profitable companies in the world. These are not fly-by-night companies. You know what? You want to know what you did not see this year? You did not see an assembly line of small AI companies IPO this year with $100, $200 billion market caps. You did not see that. The companies that are operating in AI are all of the companies that you know now today. NVIDIA, Meta, Microsoft, Apple, Amazon, Alphabet, Broadcom, right? These are all the companies, Salesforce. These are the companies that you all already know, that are already leaders in their space, that are already immensely profitable. They generate tens of billions of dollars in profit quarterly, not even just yearly. These are the companies that are innovating this new technological revolution. It's very different from the dot-com bubble. So I don't think there's going to be this massive bubble bursting of AI companies. I think there's going to come a point, which I think actually comes next year, where investors get a little impatient and a little upset about the amount of money that these companies are continuously investing, and they're expanding and increasing their CapEx into AI spend, and they're not yet generating the return. And it becomes kind of a similar situation with what happened with Meta 2 years ago, when it was Meta kept investing into the metaverse and they weren't getting the return, and the stock really got punished for it. Then Mark Zuckerberg scaled that back. He kind of abandoned the metaverse and now went full force AI, and the stock made a new all-time high. I think you're going to see something, not to that extent, because that was a pretty extreme example with Meta, but I think you're going to see to that extent, investors are going to get a little impatient with some of these AI companies and the amount of money that they're spending on AI. And I think some of that froth comes off those companies. And that's when that pullback happens. And that's when I think you're going to be able to buy some of those stocks at much better prices than where they currently trade at now. And you're going to be able to hold on to them for the next 5, 7, 10 years. So if you did not take advantage of this over the last 2 years, you better get your ass in gear. And you better not say to yourself, oh, well, next year is going to be different. Well, if next year is going to be different, then what are you going to do to make sure that it actually is different? Because if you just sit there and you're just going to say that next year is going to be different without actually doing anything different, then what are you expecting to do? What are you expecting to gain? You can't do nothing different but expect a different result. You know that that's a definition of insanity. You don't need me to sit here and say that to you. You know that. You've heard that saying, that cliche saying 1,000 times. Doesn't mean it's not true. 2025 could be your year to make it all right. 2025 could be the year for you to sit there and say, I took the next step. I reached my goals. I put my family in a better financial situation. I took advantage of these stocks and this rally, and I've taken advantage of all these things. I'm not buying up here at these prices. I think I'm going to get better prices next year. But I'm telling you now, if I'm right, and if and when that pullback happens, I'm getting my shopping list out. I'm not looking to sell stuff right now. I'm only looking to buy stuff when that pullback happens next year. If I'm right, maybe I'm wrong. Maybe there isn't a pullback. Maybe I'm wrong. Maybe there's a complete and total market crash. The markets go down 40%. We have this massive, severe recession. Maybe that happens too. I don't think so. And I'm going to put my money to work accordingly. Members of True Trading Group, guys, have had stellar years. And I'm looking forward to 25 because with the volatility that I expect, coupled with the tools and the resources that we're going to have and that we have currently, I'm expecting the banner year. I'm expecting a personal best. I'll keep you posted on that if it actually does turn out to be the case. But that's what I'm expecting, armed with the tools and resources that we have on this platform. And that is why members have been able to make money. And don't just believe me because I say it so. Believe members because they say it to be true. Members of True Trading Group, do me a favor. Type the number 1 in chat right now if you guys are making money and you're becoming better traders with TTG. Go ahead. Type the number 1 inside chat. Fibonacci says, my long-term portfolio has 3x'd. 3x'd. That's insane. Congratulations. Good for you. So now anyone that's on this live stream right now that's, contemplating what they're going to do for 2025, you should be paying very close attention to how many people you see type the number 1, because all these people are your friends, your family members, and your coworkers. And if they can do this, if they're telling you that they're making money, then you can too. There's absolutely no reason why these people can be successful and you can't. They're not smarter than you. They don't have more experience than you. They don't have more time than you. And they're sure as hell not luckier than you. But they do have an edge over you. That is what True Trading Group provides. True Trading Group provides you with real-time trade alerts from 8 professional full-time traders. And it provides you with tools and resources to help you make better decisions, to help improve your success rate, and to help you make more money. Our members are literally making money right now on SPY put options as I'm sitting here talking to you, because our other moderators are still in chat and they're trading right now, going through some SPY options. And a lot of our members are ripping out profits right now as the SPY just actually cracked and made a new low. That's your true testament. If you're watching this live stream and you're considering joining TTG and you're trying to figure out if it's the right move, all you got to do is pay attention to the people that just told you that they're making money. Because if they can do it, so can you. I'm curious how many people are on the live stream right now that are not members. Do me a favor and type the letters TTG if you guys are not part of the community. If you're not part of TTG, just type the letters TTG if you guys are not part of True Trading Group. April Schultz, how are you? Way to go. Bill Karp caught the SPY alert today with Diane on those put options. Very nicely done. 50% gain for my boy Jimmy. Great job. Elizabeth is trading right now. Elizabeth Diaz, great job. 63% gain on SPY puts 30 seconds ago for J.E. Blanco. Rob smashing 0DT shorts right now on the SPY. Beautiful. Beautiful. Great job, guys. All right, folks. Well, as the markets are sitting here making new lows, what I will tell you, my best year trading so far. There you go, my boy Nas. Nas, happy New Year to you, brother. That's music to my ears, Nas. I'm really proud of you, man. You have come a long way, dude. Nas has been a member for a while now, and he's a very faithful viewer on the YouTube channel, but also a TTG member. But really, really great job, Nas. Best year trading so far. Let's make 2025 even better, my man. Let's make 25 even better. Phil is making the last day of 2024 green with AMD put options as AMD is rolling over, making a brand new low. TTG has honed my trading with Whetstone to be the sharpest blade ever. Quantum stocks are falling nice as you predicted. Yep. The shorts on those names worked very, very well. We talked about that on the live stream the other day. Bob just caught 30% gain in minutes on SPY put options. Great job as the market just roll over right now. Look at this. Yeah, markets are starting to roll over now. Just made 60% on SPY options. Jack of all trades. Great job. As the market's making a brand new low. 30% on SPY puts. King David, great job. Jose's in some put options as well with Shy, another one of our moderators. TRT hit the UPST trade today. Nice. Nice. Good trade. Yeah, this is one of our short ideas today was UPST on the pre-market watches and game plan. There's a fresh new low. Way to go, TRT. Congrats, congrats, congrats. You see what I'm saying, guys? This is what I'm talking about. This is why if you guys are not members of True Trading Group, this is why you should be joining. Brian Thomas, yes, 24% gain with me on Holo today. Very nicely done. Very, very, very nicely done. Congrats. Green for the last day of 24. Jared Weaver, great job. Randy made some money with me today. I love it. Smooth Brain is killing it also with those Palo Alto puts with Shy. Right, there's Palo Alto rolling, rolling, rolling. Just rolling, rolling, rolling. Great job, guys, on these puts. I love it. Oracle and FSLR puts. 38% and 50% gain for Brad today. These are real people making real money, folks. If you're not a member of True Trading Group, do yourself a favor right now and go to ttgoffer.com. Go to ttgoffer.com right now and stop missing out on the action. Every single thing you see on ttgoffer.com is included in your membership. There is no upsell, hidden cost, or additional fee for anything you see on that page. You get all of our courses, the Benzinga Pro newsfeed, Trading Views premium charting software, the Trade Ideas scanner, unusual options activity, options flow, dark pool data, congressional trading data, short data, 1,000 hours of workshops covering different topics inside of our video library. All of this is included with your membership. The membership is usually over $2,000 for the year. You guys can get it now for just $847 with their end of the year holiday sale. That's right, $847. That's it for the whole year. Everything is included. 114% gain for my boy Ghost Money. Great job. Roberto also followed me on that Holo trade, made some good money. I love it. Lisa, same thing, followed me on that trade today, made some good money. I love to see it. Music to my ears. Those of you that are not members, it's time for you to start making some money yourselves. ttgoffer.com. I know I talk a big game, but I back it up, and to prove to you how much I believe in the platform that we've created, and to prove to you how much that I believe that you can be successful with us next year, I'm willing to offer anyone that joins here today a double your money back guarantee. I am dead serious. This means if you join today, you pay $847. But if you cannot make your membership fee back of the $847, I'm not just going to give you back $847. I'm going to give you back double, $1,694. That's double what you're paying to join. I can do that because our refund rate is less than 2.5%. If our refund rate was 12%, I wouldn't be able to give you guys double your money back. But it's less than 2.5%, so we can. All I ask for you to do is go through the courses, pass the quizzes, attend one study group, actually use the platform you're subscribing to. And if you are still unable to make enough winning trades that equal the $847 membership fee at least once, then we will give you back double your money. Double money back guarantees right there on the checkout page. It's real. Go read it. It's in black and white. That's $1,694 coming back your way if you can't make enough winning trades to equal the $847 that you're about to spend on a membership. That's how we prove to you how much we believe in the platform that we've created. Go to ttgoffer.com and make 25 different. Don't tell me you want something different. Don't tell me you want change, but then not be willing to actually do something about it. Go to ttgoffer.com now. Text us with any questions. 1-888-621-2127. The phone number is at the bottom of the screen. If you have any questions at all, just text us. We're fully transparent. We're an open book. Anything you guys want to know. 1-888-621-2127. All right. Text us with any questions that you guys do have. All right. Excellent. All right, folks. So I'll take you back on over to the charts. We'll take a look at Boeing real quick, because Boeing is not participating in the sell-off as the markets make new lows of the day, and tech makes new lows. Amazon, Palo Alto, Nvidia, Amazon. I said Amazon already. You're seeing a lot of your tech names still making new lows. So I'm still long Boeing from yesterday. It's the only open position I currently have. We bought Boeing yesterday just above $172. Right there was where we bought Boeing yesterday. I went over this trade with you guys yesterday on the live stream. We don't have to go over the setup here, but I'm just going to give you the update on the position, because we did take profits off a bunch yesterday. We took profits here, 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 here. Okay, all throughout this push higher in the morning. I held on to a piece. We took another piece of profit when we broke above yesterday's high, but then got to Friday's low. So there was our next target, above Friday's high, below Friday's low. You can see that support level there. I now act as resistance. We popped into it. We took another piece of profit. I'm now down to a real small piece of this position, but the stock's holding up well. It's clearly a red tape today in the indexes all across the board, but Boeing is still hanging in there green, up 0.25%, and just kind of held yesterday's close. So I'm still hanging on to this thing. It's a runner at this point. It is a small position size, guys. It's like a 10% or less piece of my original position. It's just a little bit of a runner. If the thing gets underneath 175, I'll take my final profit off the table. Again, I'm long from 172 and change, but really my final target, if I can get there, would be, somewhere in this region at the end of this week, 180 to 181 or so, if I can get it. But it's already a really beautiful trade. You guys can see here all the take profits from yesterday, and then the one take profit today above 179. And that leaves us with a nice 3-to-1, 4-to-1 risk reward type of trade from the risk that we took versus the profit we were able to secure. So that's a really good. No, the market does not close early today. The market does not close early today, although it feels like it should, but it does not close early today. So the SPY is kind of fading a little bit, guys. We're now getting down into yesterday's low. So this support level is really getting tested, guys. Previous resistance, support. So we're just kind of sitting here, trying to hold on to this level. The other thing that is unfortunate is you have a head and shoulders pattern that is formed. And I'll show it to you. Here's your left shoulder. Here's your head. Here's your right shoulder. And here's your neckline, right? So now a break of this level, a bounce back into that becomes resistance, and then you sell off further, right? And that would lead you into a red month of January, which would also suck, because when you have a red January, it's like 66% of the time the year finishes red. But my expectations for next year are definitely muted. I'm not in the super duper bullish camp of like 7,000 on the S&P, or we're going to get another 15 or 20% rally next year. I think next year is going to be a stock picker's market. I don't think the overall index is going to give you huge gains next year like it did this year and like it did last year. I think you're going to have to find individual names to do that. And I think we're going to just have a lot of volatility. We're going to be able to take advantage of it from a day trading and from a swing trading standpoint. And then we'll take advantage. If and when that dip comes, we'll take advantage and we'll be buyers. But that's what I'm kind of gearing up for, guys, as we get into next year. Does anybody have any questions? Anybody have any questions for me? Anybody have any questions while we kind of start to wrap up to the final trading day of 2024? Man, Eddie, you're really asking a lot from me, brother. What do you think the timeline looks like for that pullback? I don't know. You know, the events that happen. So the pullback, I think, could be caused by a handful of different things. There's a handful of different things that I think could happen next year that send the market lower. One of them being the worst possible scenario. The worst possible scenario is that inflation really begins to accelerate. If inflation really begins to accelerate next year and it climbs back like over 3%, and the Fed and it accelerates to a point where the Fed starts to raise rates again, that's worst possible scenario. And I don't think the economy would be able to withstand another rate hike cycle. And I think that would be a 90% probability of a recession coming if that were to happen. So if inflation were to tick up and then Jerome Powell starts and goes, all right, we're raising rates by 50 basis points. We're raising rates by 25 basis points. If they raise rates at any point, I don't think that's probable. I think that's a very unlikely scenario next year. But I'm saying if that were to happen, I would be very confident that we would have a recession within the next 12 months. If in fact that were to be the case. So that'd be worst possible scenario. What are the other catalysts that could make the markets pull back, but not be a worst possible scenario, not lead to a recession? One of them would be a slowdown in AI spending and a slowdown in all the CapEx from these hyperscalers with regards to AI. And that would mean that a stock like NVIDIA would pull back drastically. And that's going to upset the entire AI ecosystem and therefore all of your tech stocks. And then the pullback would be led by AI related names to the downside, which happens to be the largest companies in the market. And that's why I would pull the index down with it. So for example, one of the things that I'm looking for as we go into next year, a sell signal for me is if you ever hear Taiwan Semi say, hey, NVIDIA, great news. We can finally meet the demand for your high-end chips. That would be bad news. Because the thing about NVIDIA's high-end chips, now especially the demand with their Blackwell chip, the demand for their chips is far outpacing the supply available. If you ever get to a point next year where that is no longer the case and that supply and demand comes more into balance, that's going to be a sell, because that's going to make investors feel that the growth rate of NVIDIA has peaked. Not to say growth has peaked, but the rate of growth. And that would make people feel like the stock is a little expensive if the growth rate's going to be a little bit lower. And I think then you would see profit taking in a name like NVIDIA. And if people think that there's not as much demand for NVIDIA's chips, then every other semiconductor is going to get the crap kicked out of it. And that'll lead all of your AI stocks to the downside. And that gives you a 10% correction in the overall index. So that is one possible scenario that you have for next year that I'm going to be paying very close attention to. So that's one thing that's another thing that can make the markets pull back. But that's not something that leads to recession. That should just give us a pullback that I think is a viable pullback. The other scenario that could lead to a pullback next year, I think, is just an overall slowdown in the economy. Credit card debt is definitely at a concerning level. And that's a big strain on consumers. And those interest rates have not come down on their credit cards. So there has not been any relief from that. Prices have not come down. Interest rates have not come down. And yet credit card balances continue to go up. So you could see an exhaustion from the consumer in the first half of next year, where the holidays was the last spending hurrah of the consumer. And then Q1 of 2025, the consumer really just tightens up their belt drastically. And you see a sharp drop off in consumer spending and discretionary spending in the first quarter. And that shows up in earnings. And that gives you a very rocky Q1 into Q2. I think that's a very realistic possibility that you can see next year. And the other potential is debt ceiling stuff, deficit stuff, because the bond vigilantes might have a real issue. If it doesn't look like, we're going to get the deficit under control, or if it looks like the debt ceiling, there's not going to be an agreement with the debt ceiling and the deficit's going to get out of control, you could see bond vigilantes continue to dump bonds and then push yields higher. And that's going to be a real problem if you see the 10-year yield push towards 5%. Meanwhile, the Federal Reserve is cutting rates. And if the 10-year pushes back up towards 5% because of, debt issues, that can cause a much more complex malfunction in systems and markets if that were to be the case. And I think that would also cause some selling pressure in equities as yields would really start to rise. Because once yields push back up towards 5%, I think you're going to see a mass dash of money come out of equities and go into bonds to lock in 5%, because people might not be expecting a greater than 5 or 10% return in the index next year. So if you get another opportunity to lock in a 5% gain, people did that in 2022. I think you get another situation where a lot of money exits equities and goes into the bond market to lock in a 5% return. You're also going to have a ton of supply coming to the market as the government has to continue to finance their debt. There's going to be a ton of more treasuries and bonds that are coming to supply. And that puts downward pressure on bond prices as there's just too much supply. And that means upward pressure on yields. So that could be an interesting little situation next year, interesting little dichotomy there where you've got the Fed cutting rates, but then yet bond yields might actually be going higher. You guys have to remember that when the Fed cuts rates, they're cutting the Fed funds rate, which has nothing to do really with bond yields or mortgage rates or credit card rates. When the Fed cuts the Fed funds rate, they are cutting the interest rate that banks will pay to borrow and lend each other money. And then the bank, if the bank has a lower fee, then they obviously will add points on top of that to give you a loan. So if the Fed funds rate is 3.5%, a bank is going to slap 100 or 150 basis points on top of that and give you a loan at a 5% interest rate. Okay. So, but the Fed is not cutting interest rates they're not directly cutting interest rates that you as a consumer are going to feel. It indirectly affects you because that lower interest rate factors down through the financial system. So it's you have to kind of understand that. But those are some of the potholes that I see for next year. I do think that they are probable potholes. I don't think that that next year is just going to be smooth sailing to the upside. I think there's going to be a point next year where we're going to have a little bit of a rocky road, a month or two of downward action that's going to get people nervous. And that's when I'm going to be a buyer, plain and simple. Plain and simple. How about unemployment? Yeah, I mean, unemployment could be, but that kind of goes to what I was saying about like the economy might stutter a little bit. I think the economy, Jeff, I don't think it's going to be 2020. I don't think it's going to be 2022. 2022 was a legitimate crash. We were down over 30%. That was a real bear market. I don't think it's going to be that severe, but a correction, yes. So just so you got a correction is anything from 10 to 19%. 10 to 19%. Are you still going to be a buyer if inflation kicks back up? I'm a buyer unless the Fed raises rates. If the Fed raises rates again, I'm a seller. Because then I'm expecting a recession. If the Fed has to raise rates. I think you're going to see inflation tick up next year. It's just how severely does it tick up? Like, I think inflation is going to push back towards 3 and then come back towards 2.5 and then push back towards, like, inflation is going to be real sticky for the next 2 years. But it's how like, I think you're going to see, let me be clear. I think you're going to see inflation tick up, but then it's going to come back down and then it's going to tick back up and it's going to come back down. It's going to be real sticky. It's going to like chop around. That's what I think. But just seeing inflation tick up for 1 or 2 months does not mean like, oh, the Fed's going to raise rates. You've seen inflation tick up the last couple of months and the Fed still cut rates at their meeting on the 18th. Right? You have inflation ticked up for 2 or 3 months in a row. So I'm only not a buyer if the Fed raises rates. If you get a Fed one day says, all right, we're raising 25 basis points, I'm selling. And never mind just not buying. I'm actually selling stuff. What are my thoughts on Doge and them eliminating government jobs? Listen, I think the concept of Doge is fantastic. The amount of wasteful spending that our government does is ridiculous. Like, I read a thing the other day. They spent like $8 million on a study to see what birds sound like when they're drunk. Like, just the dumbest shit. And you just think to yourselves, you're like, the amount of wasteful spending that there is throughout our government is so incredibly insane that, you know, if Doge is able to save half a trillion dollars, 500, I know they said 2 trillion is their goal. I don't think they're going to be able to do that. But if they're able to save 500 billion, or if they're able to save $1 trillion, and it's not like a cut in budget, but it's more of a getting rid of wasteful spending. Because if you cut government spending in major areas of budget that directly add to GDP, 26% of our GDP comes from government spending. So you got to be careful where you take that money from. So, I mean, I think Elon Musk is the most brilliant man alive on this earth. I do. And anybody that thinks otherwise probably hates him for reasons other than his ability as a businessman. You probably just hate him because of his political beliefs. But Elon Musk is the most brilliant man on the planet, in my eyes. If anybody is going to be able to efficiently make a change, I feel like it's going to be the guy that's been able to efficiently run 5 or 6 mega companies around the world. The guy built and sold what PayPal was his first score. I think he built and sold PayPal. Then obviously what he did with Tesla, then SpaceX, then Starlink, then Burrow, then, XAI, then Twitter. I mean, like, the list just goes on and on and on and on and on of all these successful companies that this guy has built. I don't know how he has enough time in the day in order to do that stuff. I really don't. But if they are able to not take away spending from the parts of our budget that adds to GDP, but takes away spending from all the wasteful crap that there is, that's going to be a net positive, because it will start to balance it'll start to get the deficit in line. It'll start to make the bond vigilantes feel more comfortable about the deficit not continuing to expand year over year, but actually starting to bring it back down to a point of equilibrium. I think that would be seen as a very positive thing. And I think that yields would start to come down if they were able to accomplish that. But you have to be careful, because at the same time, you don't want to take spending away from areas that add directly to GDP, because then all of a sudden the economy starts to slow and you see issues there. Cutting back government jobs, will that boost the unemployment rate? Yes. But then it becomes a matter of how strong is the economy overall, which I would have a little concern over, because over 2024, the majority of, I shouldn't say the majority because I don't actually know if it was the majority, but a huge portion of the jobs that were added in 2024 were government jobs. So is the private sector of the economy strong enough to absorb the loss in government jobs? I don't know. I actually might not think so. I think that you would probably maybe see an uptick in the unemployment rate. I don't think that the private sector can absorb, a significant cutback in government jobs. But I don't know if that's what they're going to do. I don't know what they're going to do. Nobody really does. We just kind of have to wait and see how this all plays out. It could be really good. It could also be bad. It depends on how they do it. You just have to say to yourself, do you think Elon Musk is going to be able to do it? I mean, betting against Elon Musk has never worked for anybody. Betting on Elon Musk has made a lot of people very wealthy. So we'll see. I don't know. So we'll see. My outlook on small caps, I'm not as optimistic in small caps as I was earlier in the year. Earlier in the year, I was very optimistic on interest rate sensitive stocks. I was very bullish on, like biotech. I was small biotech, not large, small biotech. They're more sensitive to interest rates. And the Russell and small caps, I was more concerned. I was more bullish on them because I thought that we were going to have a really nice, steady rate cut cycle in 25. That's no longer the case. Inflation's been stickier than people had anticipated. And the Fed just told you we're not cutting rates as much as we were going to. We might only cut rates twice next year and then twice in 2026. So that means that there's going to still be that little headwind on small caps with interest rates being a little bit higher. That eats into profitability. That increases that, means their debt expenses are going to be higher. The cost of capital is going to be higher for them going forward. And it just doesn't paint as bullish of a setup as you would have initially thought. If you went back 6 months ago, everybody thought that we're going to get this nice, steady, every other meeting, we're going to cut, pause, cut, pause, cut, pause. That was the expectation, that you were going to get at least 4 cuts next year. There's 8 Fed meetings a year. The thought was you're going to get a cut every other meeting and give you 4 cuts. That's no longer the case. So that gives you a little bit of a headwind there for the first small caps. Any other questions? Is it most common for stocks on the first day of the new year to go red? I don't. I don't. No. I don't know what the stats are on the first day of the year. I don't know what the stats are. So is it most common? I mean, if someone has that statistic, I don't know what that statistic is on, how many, what percentage of the time is our stocks red the first day of the year? I have no idea what that statistic is. Thoughts on AMD recovering in early January? I don't think so, Andrew. I don't think so. I think that AMD actually trades lower in 2025. I'm eyeing like a $100 test. I think AMD might get down to here. I actually don't think you're going to get a significant recovery in AMD next year, or in January, you said. Does then end the Russia-Ukraine war have possible repercussions market-wise? So I do think the Russia-Ukraine war comes to an end next year. I think that would be, the markets would celebrate it. But I don't think it's going to have any meaningful, lastful impact on the markets. The market, from a financial and economic standpoint, the market doesn't care really right now about the Russia-Ukraine war. Of course, from a humanitarian level, we care, but from a market standpoint, the market doesn't care if Ukraine attacks Moscow or if Russian troops are advancing towards Kiev. Like, the market doesn't necessarily care. What could be good is that I'm interested to see, when you look at, a longer term net positive to the end of a Russia-Ukraine war could potentially be, well, does that maybe ease some food prices? Does that, Ukraine being that area of the world, being the breadbasket of the world, do we start to see prices ease up on wheat and bread and different grains? Do we see energy costs and energy prices into Europe? Do we see energy prices start to come down a little bit in Europe? Europe's economy is really struggling. They're nowhere near as strong as the United States. So lower energy prices could be better for them and could boost their economy. So those are some longer term positive impacts that we could see from an end of the Russia-Ukraine war. But I do believe that war is going to come to an end in 2025. Hopefully I'm right, because I don't think anybody wants to see that continue. But we'll have to wait and see. Mike, you accumulate AMD versus NVIDIA in long-term portfolio. Do you see AMD doing better over NVIDIA long-term? No, what are you talking about? My NVIDIA position is much larger than AMD. What makes you say that I've accumulated AMD versus NVIDIA? I've bought NVIDIA every single year since 2018. I also bought AMD, but AMD is not as large of a position as NVIDIA. I mean, NVIDIA's gone up, I don't know, 1,800% from when I bought it. AMD has only gone up a couple 100%. So my NVIDIA position is significantly larger. My NVIDIA position is one of my top 7 largest positions now, or top 8 largest positions now. So I'm still bullish on AMD. I just think the AMD they're just behind. They haven't been able to really get into that AI space. Like, they've just been really focused on taking market share away from Intel and crushing Intel, and they've been successful at that. But I'm bullish on both names. I'm bullish on AMD still, and I'm obviously bullish on NVIDIA. But AMD has not done well this year at all. That stock has done very, very poorly this year. It's down, substantially on the year, and it's off, it's well off. It's down 40% from its highs, or, the stock is not doing well, but I think that eventually it will. Would I say that some of the selling pressure, some tax loss harvesting on AMD? It certainly could be. You certainly could see tax loss harvesting on AMD from people that are down money on it this year to offset gains, especially in the semiconductor space. Because if If you own Broadcom, like we do, if you own NVIDIA, like we do, these are semiconductor positions that you are up a tremendous amount of money on. So some people could be selling, the AMDs of the world, or the Intels of the world, or the SMCIs of the world, and harvesting those losses to offset their capital gains. Can Carvana be a good short? I think it could. Yeah, I think you got to wait for a bounce, though. I think you're safer shorting it up here than you are shorting it here. You short it here, I think you might get stopped out on a bounce and then eventually roll it back to the downside. But I do think that Carvana is going to see some lower price. I think Carvana maybe gets back to like 170 or so. It's going to take a couple months, but I do think it gets a little bit lower. PFLT? I have no idea what this is. Pennant Park Floating Rate Capital? Lynn, I have no idea what this is. It pays a 0.1% monthly dividend. That's not that's not good. I could go buy AbbVie and get a 3.5% dividend. 0.1% every month is not a lot. I don't know anything about. I have no idea what PFLT even does, but 0.1% dividend is nothing. Even though it's paid monthly, it's nothing. RGTI is good for long? No, it's not, man. All right, so these are RGTI is only one of these quantum names. The thing about these quantum names, and I've been saying this a lot lately, and a lot of people don't like me for saying it, but these stocks are going to come crashing back down to earth. These quantum names have gone absolutely crazy over the last month or so as people started to get excited about quantum computing because of, Alphabet, doing their quantum chip thing. And it's all speculative hype. There's no fundamentals to support. There's no fundamentals to support the move in these stocks. Like this was a $1 stock that's now at $16. These companies are not yet profitable. These, quantum computing does not yet have a consistent real world application. There's no path to profitability for these stocks. It is all speculative hype. And eventually I believe that these stocks are going to come crashing back down to earth. And don't get me wrong, I am very bullish on quantum computing long term. I am. I just think it's way too early for people to be buying stocks that are up 1,000% in a month because they have the word quantum computing on they have the word quantum on their website, or the word quantum in the name of their company. I just don't think that these moves are going to be sustainable. And I think that if you fast forward, 6 months from now, if you buy these stocks right now, fast forward 6 months from now, you're going to be very disappointed that you're going to be very upset that you did. I don't think you're going to be very happy that you did. I don't think fast forward 6 months from now, an RGTI is at $50. I think you're going to fast forward 6 months from now, and RGTI is going to be at $6. So, I talked about this on the live stream the other day, that I've been feeling that, these quantum names have are running out of momentum, and I feel like they were good shorts. And we talked about one of my trade ideas this week was actually short LAES, and this stock has fallen from 950 now all the way to 650, which is our target. We literally said on the live stream on Sunday night, I said LAES short 925, target 650, and there it is. Monday, high of the day 950. Today, low of the day 654. It's exactly what we said on the live stream. We talked about IO and Q getting a little bit of a fade off of that high. That happened. We talked about QMCO with a pullback back into the 50s off of this shooting star top that was put in place on Friday. Now, where's QMCO? 54. So these stocks have kind of temporarily have run out of momentum. We can see if that momentum picks itself back up, but I just don't think that these stocks are going to be able to sustain these moves. I think QMCO goes back into the 30s. I think IO and Q goes back to like 28 or 30. I think that QUBT goes back to 9. I think QBTS goes back to like 5 or 4. I think RGTI goes back to like 7. I just think these stocks are going to come back down before they really, move higher. I trade them. They're really great trading vehicles. That they're great stocks to trade, but to buy them now in your long-term portfolio, there's no way that I can justify. There's no way that I can justify buying those stocks at those prices. I really can't. Which stocks are good longs? I like software names. I think software is going to have a good year next year. ServiceNow, Oracle, maybe even like an AppLovin, Salesforce, Snowflake. I think there's some decent companies for next year. I do like the software sector, because what was the idea that I have is that AI spending is going to start to shift away from hardware and into software. So as companies start to scale back on some of that CapEx spending, and then demand slows and supply catches up for like NVIDIA high-end chips, people are going to look towards building out software as part of those AI operations. And I think that some of your software companies are going to start to see some of that revenue increase. I have no idea, ML. When you get the answer to that one, let me know. You can't ask questions like that. It's like you're asking the wrong questions. Which sector is going to be poised to run next year like quantum ran at the end of this year? You're asking the wrong questions, because the only way that I can answer that question is if I have a magic 8-ball and I'm psychic and I can predict the future, which I cannot predict the future. That's the wrong question. You don't you can't just foresee something happening that hasn't happened yet. Like, the only reason why everybody got excited about quantum was because Alphabet came out with their successful test of that quantum chip that they are fooling around with. And everybody got excited about quantum computing now. Like, you can't just foresee these things from happening sometimes. Like, you have to be able to adapt, and you have to be able to adjust as things happen in the world. Like, that is what makes a good trader a good trader. A good trader is not somebody that predicts the future. A good trader is somebody that adapts to what's happening in the real world. and identifies opportunities, not someone that says, well, in 6 months and 14 days, 3 hours and 46 minutes, company XYZ is going to have a news release that's going to send the stock up 500%. That's not what makes a good trader. You know, I don't know what sector is going to run like quantum this year. Whatever piece of news comes out at some point next year that gets people excited. Who knows? Maybe it could be a bird flu outbreak, and all these bird flu stocks that have vaccines for bird flu and treatments for bird flu, they go crazy. I don't know. You know, I have no idea. I don't know. I wish I knew what sector was going to do that next year, but I don't. Markets are working their way back down to the low, man. This market is so weak. We just rejected intraday VWAP and prior low. Bleh. Couldn't even get back above that. Oh man, Jabberjet, I really want you to join True Trading Group. I really, really, really do. I really, really want you to do. I really want you to join True Trading Group. I'm nervous. Jabberjet, I'm nervous. The reason why I'm nervous is because all of the stocks that you have asked me about on whether or not they're a good long are stocks that have gone straight up for 2 months. And you're literally chasing the move, and you're going to get caught buying the top of these moves. When professionals sell, you're going to be the one buying, and these stocks are going to come back down. So for that reason, Jabberjet, I really, really want you to join, so that you don't make those mistakes. Like, look at what SoundHound has done, and you're asking me now if you should buy it. The time to buy SoundHound when it was $7, $8, $9, $10, $11, $12, $13, not when it's in the 20s. You know, like, do I think there could be a buy on SoundHound on a pullback? Yes. You know, but I would let that thing pull back a little bit more. I think SoundHound's coming back. I think it's going to go back to like $13. You know, SoFi I like better. I would say buy SoFi on pullbacks into 14. I think SoFi is a stock that's trades, you know, in the low to mid 20s. I'm pretty bullish on SoFi. I've owned SoFi for a while. I've held it. I was down on the position. I've owned it for a while. It's not a large position in my long-term portfolio, but now that you're back above huge resistance at 14, I'm looking for 14 to stay support now, and then see if that stock over the course of the next year can push up into the 20s. All right, let's see. I like healthcare stocks. One area where people always, no matter how well bad the economy is. Yeah. Yep. I think healthcare stocks are going to have a better year in 2025 also. You know, hold on a second, guys. Hold on a second, guys. Guys, hold on one second. I got something real amazing that I want to show you guys. Hold on one second. I'll pick up some of your questions in just a moment, but I got something real amazing I want to show you guys. SPY just is about to make a new low. Hold on one second. Hold on one second, guys. Hold on one second, guys. I'm going to show you guys something really cool. All right, I'm here. Sorry, guys. What assets does TTG focus on? So, Dominic, we trade predominantly options, equities, and futures. There is sporadically some crypto trading, but we trade options, futures, and equities. Dominic, I think you were on the live stream yesterday, brother, right? You were with us yesterday, I'm pretty sure. I think you've been on the last couple of days, Dominic. I recognize the username. Well, welcome back, Dominic. Happy New Year. Feels like today should have been a half day, right? I say it every year. Every year I'm like, it doesn't make any sense why today is not a half day. It should be a half day. It should be, but it's not. Market will also be closed, guys, January 9th to honor the funeral services for former President Jimmy Carter. So that was something that was announced yesterday. So the market will be closed on January 9th to remember President Carter. So you guys can mark that down on your calendar. January 9th. No trading activity on January 9th. Have they done that for any other president? I honestly don't know because all the presidents that I know are still alive. When did the last president die? I don't. All the former presidents in my lifetime are still alive, so I honestly don't know if they've done that before. It's a good question. I honestly have no idea. They have? Okay. I would have assumed that they did, but I had no idea. Oh, that's right. Bush. Oh, my God. That's right. George Bush. That's right. That's right. That's right. Well, Reagan, I was too young. I mean, when was Reagan? I was too young. When was Reagan? Reagan was a long time ago. When did Reagan die? Yeah, I don't know if yeah, Reagan died in the 90s. Yeah, I was like 10. You know? I was like 10. No, I don't remember. No, I was born in 1985. I was born in 85. So I don't really, I don't remember. I didn't start really paying attention to the stock market until like 2005, 2006 is when I really started paying attention to the stock market. So anything that happened, prior to that, I didn't have personal experience through. Reagan died in 2004. Nixon died in the 90s. Reagan 2004. Yeah, so Nixon, Reagan, Bush, now Jimmy Carter. Yeah. And I guess who's the oldest after? I guess Bill Clinton is the oldest. How old's Bill Clinton? Or is it? I mean, well, Biden's in his 80s too. Let's see. How old is Bill Clinton? Ah, wow. Clinton's only 78. Wow, Bill Clinton's only 78. I would have thought Bill Clinton was in his 80s. Bill Clinton's only 78. Yeah, because Biden's 83, 80. What's Biden? 82, 81, 83, 82, something like that. And then Bush is young, Obama's young. I think Trump is in his, Trump's 78, I think also 79, 78. No, Clinton, Biden, and Trump are not the same age. Biden's the oldest. I think maybe Clinton and Trump might be the same age, but I think Biden's definitely a few years older. Yeah, Biden's 82, Trump is 78. Okay, so Trump is 78, Biden's 82, Clinton's also 78. All right. Well, either way, it doesn't matter. I don't know how I don't even know. We just made a total left-hand turn and started talking about presidents' ages. But anyway, the market's closed on January 9th. My market just tried to hold that little double bottom right there. Big shout out to the TTG team, guys. You guys are in the team is in chat right now, ripping it apart, man. On these SPY trades. Really great job. Guys, I'm going to show you something. I'm working on something literally right now. Tom Lee said the SPY can reach 700 by mid 2025. I don't think so. I think listen, Tom Lee is a brilliant man, and he literally has been right about everything he has said for the last 4 years. But with that being said, doesn't mean I just agree with everything he says. I don't think the SPY is going to get to 7,000 or the S&P. I don't think the S&P is going to get to 7,000 next year. I think we're going to fall short of that. Okay, guys, so there's something I'm going to show you in just a minute. My business partner is going to come on here. Adam's going to come on here in just a moment and actually show you guys something new that we've implemented into the AI tool. So in case you guys missed it, we received the Benzinga FinTech Chairman's Award for Best AI Analysis Tool this year. And if, we'll pull it up. There's the award right there. That's the Benzinga FinTech Chairman's Award for Best AI Analysis Tool. My business partner and I were in New York City last month at the award ceremony to accept the award. There we are on stage receiving the award. And our AI tool has allowed our members to make money and, make their trading easier, simpler, and more successful. And that's really the goal, right? The goal is to be more successful, more consistently, make money on a consistent basis. So we are just going through a new function with the AI that I'm working on as I'm on the live stream. Adam and I are working on it right now, and it's incredible. He's going to come on in just a moment and show you guys. This is going to be cool. Johnny, you too, brother. Happy New Year, Johnny. If SPY is the correct 10%, then it would come to the 200 moving average. Lower than that. Lower than that. Oh, I'm sorry. Actually, that's from today. I'm sorry. No, you're right. You're right. I'm wrong. So the 10% correction. So technically the way that you calculate the correction is actually off of the all-time high. So a 10% correction from 609 takes you to 540 something. So like right here is a 10% correction. So here's a 10% correction right there. So down to the 200 moving average, you would be correct. But I think if you get there, I think momentum could take us a little bit further. I think we can maybe even get down to like here, maybe like the 520s, and that's where I'm going to be buying, right? I'll be a buyer here, and I'll be a buyer here, right? In the long-term portfolio. So we'll deal with it. We'll deal with it when the time comes. We'll see if I'm right. Zintis, my pleasure. But I mean, listen, guys, it's not, I'm not giving investment advice, like, so Zintis says, thank you, Mike, for all your investment advice over the years. I just want to clarify, like, I'm not a licensed like financial advisor, retirement professional, or anything like that. I tell people what I'm doing with my own money, right? I give you my opinions on what's happening in the market, what stocks I like, which ones I don't. And you guys are free to take that information and do with it whatever you please. I always suggest that people talk to retirement professionals and licensed professionals for your long-term stuff, because everybody's situation is different. And you need somebody that understands your current situation, your goals, your risk tolerance, your income, your objectives, your current financial situation. Because I don't know any of that stuff, so what I might tell one person could be different from what I might tell another person. Like what I do with my own money and what I, help my father do with his are two different things. So that is also very important. It's my pleasure to share this information with you guys, and I'm just sharing my knowledge. I'm sharing my experience. And I'm if that helps you guys make money or saves people from losing money, then that's a beautiful thing. And I'm very, very happy about that. Is MSTR or coin a long-term ad at any time? I got to be honest with you guys. I'm really getting nervous about MicroStrategy. The amount of leverage that Michael Saylor is using to continuously buy Bitcoin is going to put MicroStrategy in a very precarious situation if Bitcoin experiences another severe downturn, because that leverage is going to blow up in his face. Now, if Bitcoin doesn't go lower and it just continues to go higher, then that's fine. But if you saw another like 40% drop in Bitcoin, which we've seen that happen how many times? How many times have you seen Bitcoin go down 40%? 10? Like, how many times have you seen that happen? It happens all the time. Bitcoin goes down 40%, then it goes up 100. Then it goes down 40%, and it goes up 100. If there's ever like a severe downturn in Bitcoin, like if Bitcoin goes back to 50 or 60K, MicroStrategy is going to be in, I don't know, MicroStrategy is going to be in a little bit of trouble, just because they're so leveraged. Leverage is what kills people. So when hedge funds get blown up, right, it's leverage. Leverage is what kills people. And they just they sell more. They keep selling shares, raise money, buy Bitcoin. And Michael Saylor will tell you himself that he's fully levered, right? He tells you, he goes, we're fully levered on the positions. And I'm like, all right. if there is a severe downturn in Bitcoin, that it's going to be interesting to see what happens with MicroStrategy, because MicroStrategy should then at that point go down at a more aggressive rate than Bitcoin itself. I'm bullish on Bitcoin long term. Like, I do think you're going to see Bitcoin 150 to 250 in years to come, but I think you're going to see a severe downturn at some point, like we've seen for the last decade. You've seen Bitcoin go up and down huge rates almost every year. So do you think we will make new all-time highs, then pull back 10%, or is it just pull back from here? That's a great question, Demi. That's a great question. I actually think we are going to make a run. So here's what I think. I'm getting so incredibly specific, and I'm really foolish for doing this because it just opens me up to be wrong. And for people like, oh, you're wrong. All right. What I think actually happens is, like, you're going to, like, pierce this support level, then, like, recover it and then push back up and then top out there with, like, a tail and then drop back down from there and then roll over. So that's kind of what I think is going to happen. Something that looks like that. I don't know if we actually make the new all-time high, but I think it'll be tested. So if you get back to here and then drop, or if you pierce it and then drop, same difference. But I do think that I think you're going to be at 550 before you're at 620. My thoughts. Maybe I'm wrong. We fill gap first, which is also close to 100 moving average, move up to 50 moving average, and then drop. It's pretty close for the most part. How can you tell if we're in a bear market before the 20% pullback or when a bull market ends? Lou Trader, the $1 million question, brother. You can't. You can't, Lou. So you can't tell you're in a bear market until you're actually in a bear market by definition, right? Like, the definition of a bear market is not stocks are going down. The definition is we've dropped more than 20%. Then you are in a bear market. So there's no way for you to say, like, oh, the market's at an all-time high, but, like, this is it. Now we're in a bear market 6 months from now. It's not, right? You can't. I wish I had that answer, Lou. Nobody has that answer. So don't spend your time looking for that answer, because you're never going to find it. All right, so guys, here's what we're going to do. Actually, I'm going to wrap up the live stream. We're finished with this thing I want to show you. We're going to keep this for members only, though. Members, head on over back into main chat. I'm going to jump back into main chat. Adam's going to hop in main chat. I got something that I want to show you guys with regards to the AI tool and what we were just able to perfect. So head on over into main chat right now, all of my members. Those of you that are not members of True Trading Group, like I said, go to ttgoffer.com, take advantage of the 847 price point. There is a double your money back guarantee with your membership in case you can't make the 847 back at least once. Then you guys will be, yes, today's the last day for the discount, Dominic. Dominic, I feel like you're ready to join, brother. If you're ready to join, go right to ttgoffer.com. Or, Dominic, if you have other questions, because I'm going to sign off the live stream right now, I'm going to go back inside of our chat room. If you have any questions, Dominic, and this goes for anybody else that's not a member, just text the phone number that's at the bottom of your screen. We'll answer any questions that you have. All right, that's 1-888-621-2127. Just text that number. You guys have any questions? All right. All right. Have a great rest of your day. Good luck the last 2 hours of the trading session and last 2 hours of the trading year. Have a happy and safe new year. And I'll see you guys all on January 2. All right. Great year, guys. See you all later. Subscribe to the channel if you have not done so already. Members, go back inside main chat. I'll see you guys there. Take care.